Good morning, viewers. It's Monday morning, March 10, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Roller coaster week for markets ended on that same note, with stocks whipsawing as traders tried to make sense of a myriad of headlines around the economy, tariffs, and geopolitical developments. US stocks turned higher on Friday after the latest remarks from Federal Reserve Chair Jerome Powell, but remained lower on the week after an onslaught of tariff related news. US stocks finished higher on Friday, rebounding from early declines after Federal Reserve Chair Jerome Powell said the economy was in a good place. But uncertainty about US trade policy led to Wall Street's biggest weekly decline in months. Powell said the central bank will not be quick to cut interest rates and echoed concerns about President Donald Trump's policies. Markets have been roiled this week by uncertainty about tariff decisions on imported goods from Canada, Mexico, and China. Powell said the Fed will take a cautious approach to monetary policy easing, adding the economy currently continues to be in a good place. Just minutes after a slide that drove the S&P 500 down over 1%, the gauge stayed an oversold bounce as Federal Reserve Chair Jerome Powell said the economy is fine. The Nasdaq 100 briefly breached the threshold of a correction. For the day, the Dow Jones Industrial Average finished 223 points, or half a percent higher. The S&P 500 added 0.55%, and the Nasdaq Composite tacked up 0.7%. It has been a whirlwind of a week for markets as tariffs hit a new fever pitch, sending the S&P 500 into a tailspin that briefly drove in below a closely watched technical level, its 200-day moving average. While the gate saw a late-day rebound, it still ended with its worst weekly sell-off since September. The benchmark S&P 500 finished its biggest weekly loss since September. The S&P 500 and the Nasdaq also registered their third straight week of declines, the longest losing streak since mid-July and early August last year. For the week, the S&P 500 ended down 3.1%, its sharpest decline since before the 2024 US elections. The Nasdaq was down 3.45%, and the Dow was down 2.4% on the week. The Russell 2000 small cap index fell 3.86% also for the week. Wall Street also kept an eye on the latest economic data. US job growth steadied last month while the unemployment rate rose, a mixed snapshot of a market hanging on the balance of a quickly changing government policy. The monthly jobs report early Friday showed non-farm payrolls picked up a touch in February, with 151,000 jobs added, but slightly undershot expectations. This was after a downward revision to the prior month. The unemployment rate crept up to 4.1% while it had been forecast to hold steady. Unemployment ticking up has had worries about the economy's resilience. Morgan Stanley and Goldman Sachs have lowered their growth forecast for the economy. Treasury yields dropped modestly in response to the lackluster report. Later in the day, investors seemed reassured by Fed Chair Powell's signals that the central bank was comfortable maintaining its current wait and see stance on interest rates as it digests trade policy changes that have led to elevated uncertainty. Investors, though, are still fretting over the economic outlook. The Trump administration's swerving trade policy is weighing on the growth expectations and consumer and business confidence. The latest U turn came on Thursday when the White House broadened a short term tariff reprieve for Mexico and Canada. On Thursday, Trump offered a 4-week reprieve on tariffs he imposed on imports from Canada and Mexico that fall under a free trade pact. The US remains in a trade war with China. Reciprocal trade barriers and other duties are expected to take effect in the following weeks. Chip stocks rebounded. Broadcom's upbeat results sent its stocks up to 8.6%. The chip maker assuaged investor worries about artificial intelligence infrastructure demand with a strong second quarter forecast. Elsewhere, Walgreens and Dollar General were two of the top gainers in the S&P 500. Hewlett Packard Enterprises, after saying its annual profit forecast would be hit by US tariffs, was the biggest loser on the day, falling 12%. Costco fell 6% after the retailer missed Wall Street estimates on quarterly earnings as merchandise costs increased. As the week wrapped up, US Treasury yields edged higher with the 10-year yield moving up to 4.317%. Bitcoin fell 4% to $86,226. And in commodities, West Texas Intermediate crude rose 1% to $67 a barrel. Spot was little changed. The greenback weakened further. The dollar index dropped to its lowest level since the days after President Trump's election in November. The dollar saw its worst week since November 2022. To sum it up, Powell is echoing what the investors feel: unease. That while the adjustments made by the administration may well work and put the country on a better financial footing, the speed and whipsaw like nature of the change makes it difficult to predict and to plan around. So, the best action when that occurs is to sit and wait. That's it for today, my dear viewers. And if you're enjoying our content, please do subscribe, like, and share this video as much as possible. I'll see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.